Welcome back. I know that I've been walking you through a lot of fundamental jargons, terms, and definitions. It is a lot. Normally, it would take years to learn. We're trying to give you in a very short and concise manner. And that is why in this video, we're going to walk you through some fundamental analysis techniques that are going to streamline your approach. There's a lot of news out there. As a beginner, you can jump right in and get lost. Therefore, in the next few minutes, we're going to give you a few methods to sort through the noise. Let's get started. First, picking the right currency. This is very important because picking the right currency depends on its liquidity, volatility, correlation to other currency pairs, and your own trading style. The most liquid currency pairs are the euro dollar, the dollar Japanese yen, and the pound dollar. They are also the most volatile, meaning there's greater potential for greater rewards, but there's also more potential for higher risk. So as a beginner, you might want to start with less volatile pairs like the dollar CAD or the Aussie dollar. You need to also pay attention to the correlation between Forex pairs. And the best thing to do is to just pick the one that you're comfortable with, the one that fits your trading style best. For this video, we're going to pick the euro dollar. Next, you need to identify the relevant information. There is a lot of news out there. Every single day, tens of thousands of news articles are published. And in order for you to sort through that mess, you're going to need a technique. The technique that we have is that you need to pick the media outlets that cover your currency pair the best. If you are focused on the dollar, pick US outlets. If you are focused on the euro, pick European outlets, and so on. Why? They're going to give you the best analysis because that currency is most relevant to them. So after you pick the best news outlets for your currency pair, you now need to just go back a month. Check the articles, the top headlines for the past month to see what the market has been looking out for. Once you get a better picture of the economic indicators, not all of them are going to make the top headlines, but a few of them will, like inflation, interest rates, and so on. That is what the market is looking out for. That is where the sentiment is facing. And next, you now need to research and analyze on these economic indicators that you have chosen. Utilize top news media outlets, economic calendars, financial analysis websites in order to figure out what is going on about the economic indicator and how this strengthens your fundamental analysis. A good approach would be to invest in sites like Bloomberg, Wall Street Journal, The Economist. These top sites give verified information, meaning that you don't have to second guess the information that you're consuming, and this will lead to a sound analysis. These news outlets have their own experts under their brand, and following their analysis on every new economic updates is going to speed up your own analysis. I'll not lie to you, as a beginner, it's going to take time to do the first two analysis. It might take you an hour or two just to understand what you are consuming. But the beauty about this is that compound knowledge will take effect. And over time, you can cut down that 1 to 2 hours to 10 to 15 minutes every day. You already have the previous knowledge. All you're doing now is just updating yourself. So next would be to use the economic calendars. Economic calendars is a very unique tool because what they do is they allow you to see the previous economic data that was released and what is to be forecasted this week, next month. What you're going to see is a lot of opinions. Some people might say, oh, interest rates are going to raise by 0.5%. Others might say interest rates is going to raise by 0.25%. The best thing for you to do as a beginner is to follow the majority. Yes, they can be wrong, but it is safer for you to follow what the experts say because they have had time to invest this type of analysis in themselves, in their own recommendations, and it's safer for you. If you were to get it wrong off of a sound analysis, you probably feel much better than if you were to get it wrong off of your own unsound analysis. So in the next video, we're going to run you through what to do now that you have done your research, you've analyzed the economic indicators that the market is watching. See you soon.